Well then, welcome to another program of the Big Q. Today, I have the pleasure of hosting the Rwanda Stock Exchange CEO, Mr. Célestin Rwabukumba, and we will be tackling the issue of savings and, of course, the stock market in the country. Thank you very much, sir, for making time to be with us, and of course, welcome to the program.
Thank you.
Now, the percentages of Rwandans aged between 18 and beyond who have opened savings account continue to increase year by year. What would you say, where would you say we are today when it comes to savings?
Well, I must say the savings culture in Rwanda, though it's increasing, we are still far. But we have encouraging numbers of people who are joining the wagon one way or another. Because you talk about savings, you start from the overall financial inclusion. Okay, so as a country, by 2012, we had about 72% of financial inclusion in the country. And at that time, we were number 3 on the continent. Then last year, by FinScope surveys, they show that in 2016, Rwanda is at 89% of financial inclusion. That is formal and informal at the same time. So with that, it makes us number 2 now on the whole continent, behind Mauritius. And there are more ambitious targets to even go beyond what Mauritius is doing today, so that we are at the top as a country. So now, having said that, that's the overall financial inclusion. However, the capital market or savings levels are still very low, and people do not save formally sometimes. So people prefer saving in land or in their mattresses and stuff like that. But we want them to come back to the banking system, the financial system in general. But what I would say is that it is increasing slowly. When you see the cooperative movement in Rwanda, when you look at the microfinance institutions and then the capital market fraternity, which is emerging, you are seeing the numbers of uptake, at least in the capital markets. What we see, 80% of our investors, people who have active accounts on our market, they are from within Rwanda. Because that includes also institutions, but most people, of course, we don't have that many institutions. We have more, retail investors who are investing, of course, in small amounts, but they are there. So 80%. So if you look at between, say, when the stock exchange started operations officially, the uptake was about 11%, every year, for between 2011 and 2014. So now we started implementing a new strategic plan for the stock exchange of 5-year. So now what we are seeing is that, from 2014, it's a 5-year plan, we've been growing at the rate of the uptake in 20% from retail investors. Every year. So around roughly 20%. But again, the numbers we are coming from are very small numbers. So I would wish to have the same numbers in mobile money accounts, but it's not happening yet. But we are hopeful once, we get more products on the market and people get to know and they know the benefits and these things we are organizing about the market, and more issuances from government bonds and corporate bonds and more IPOs coming. Those are initial public offers. We are hopeful it's going to keep increasing the trend.
So now on the Big Q, we do give opportunities to our viewers to ask questions. And one, Rosemary says, we do have a growing number of saving, especially with the age brackets aged above 18. But we don't see many women. We have more men saving than women. What are we not doing right to have more women saving?
Well, I think that would go in general with the gender issues. It goes beyond that. When you are looking at the promotion of women and the women entrepreneurship and the savings and societies and so on and so forth, government is putting a lot of effort into gender equality. So they are doing that because there is a gap already in all sectors of life. So people tend to say, oh, even a woman can win. That's not appropriate, we know that. But unfortunately, that's where we are coming from. But again, improvement is taking place. And our capital markets business, we are not excluding women. Matter of fact, actually, we are members of He for She. So personally, I am. And our institution, in the Capital Markets Authority, we try to promote people without, looking at the agenda per se. So you look at our management, for example, at the stock exchange, 50-50. So the Capital Market Authority, the chairperson is a woman, and they have board members who are women. In our own board, we have at least 25% or 30%.
But how do we turn that to have them encouraging other women to actually save?
It is that start actually. If you remember, just the other day, it was a few weeks ago, during Transform Africa, there was a fund which was launched by you know, the New Faces, New Voices. We are very instrumental into that, in advising them and seeing how they can also, you know, start saving so for their future and different projects they have. So it's not only that one, because we have a lot of BMINA, if you may say. But you see, BMINA thing, you know, it's not. Those are savings, informal saving groups. You know, and we are looking at ways we can make them formal. And many of those, actually, if you look at them deeply, you may find that there are many that belong to some to groups of women.
Yeah, definitely.
So we want to keep encouraging that professionally, first of all, but so that they can also encourage the others.
Now, John says Rwanda launched the Rwanda National Investment Trust Iterambere Fund to boost savings through capital market. How does this work?
You know, an investment trust, you know, an institution of that kind it's like a collective investment scheme. Yeah. So what happens basically? It's a fund that is put together. People contribute to that fund, and their funds are managed professionally. Okay. So as opposed to you going straight to buy your shares in Bralirwa or Bank of Kigali or buy a government bond which is being issued, you go to your to the fund. That's a Rwanda National Investment Trust. They have created the first fund of its kind in Rwanda, which is called Iterambere Fund. So that one, you put the smallest units, the smallest amount of money. The minimum amount you can invest is 2,000 francs, Rwanda francs. So that fund, so you just give them money, but that money is invested across different instruments they have chosen. So they invest on your behalf as a fund. So as you keep contributing, the returns from the general pool of funds that were put together, and they are managed professionally with proper governance and accountability, it's done for you. So it's not you who goes to do you know, analysis and analyze what is happening and go picking stocks, or you go picking bonds on or any other instruments that come to the market. They help you. You know, do that. So that's what we've done for the retail investors mainly. Actually, those type of funds, it was, you know, by creating that fund, we were inspired by where it has been done before. Unit Trust of India is one of a good example of that. When the Indians went to war in the 60s, 64 or something with China, the early 60s, the war ended, and the world turned their back against India. So Indians said, you know what, let's create a local fund. They started calling it Unit Trust of India. So the one unit was costing 1 rupee, Indian rupee. So today it's owning banks in America, UK, and anywhere you can name it, big investments in all sectors of the economy. So you put a lot of funds together, and they are managed professionally with a good cause, you know, with a one goal of you know, growing the fund.
But who can apply? Anyone? Can I just take my money there?
Anybody, actually, as long as you have.
Limit?
There's no age limit. If you are not 18 years old, if you are like an underage, your parents can do open an account, a custodian account. Actually, yes. They become your custodian actually, so they help you. Yeah.
We have saving clubs in most universities and secondary schools. Now this is from Gahamanyi, who says, is saving clubs the way forward to restoring or to encouraging the youth to save their money for future use?
Definitely. You know, I'm glad you are saying that. You know, there's a challenge we organize as a capital market industry. We just completed today, actually, at the 4th edition. You know, we do it every year normally. So what we do, we have started with the universities across the country. We started slowly, but now every year it keeps improving. So the one we just concluded today, was participation was more than 400 students, okay? And then from more than, actually it's about 21 universities, and 48 teams competing against each other through essay writing, okay, individually. But we also have quizzes. It's like a TV quiz where you go in front and then you compete with each other. So the main goal or objective of that is to encourage them to save and learn about investments options and learn about the profession in the industry and all that. But the biggest component of that is the savings culture, because we want to instill that into the youth and people at a younger age, so that it can be useful for them in the future. One good example, I can give you two. Actually, good 1 or 2 examples which we have seen happening in real life. The first one, I'll take a very good example. Today's investment club, the challenge that has finished, capital market challenge for 2017. So the MC, the guy who has been coordinating that, is one of those children who were in school at the time when we started. The first edition he participated, the second one he was very close, and his friends, their club, they managed to...
These are university students.
They managed to get some award. The proceeds they got from that, they went into the market, because we encourage them, when you're awarding them, we award them money to invest, to start getting that culture. So they invest in the market. So they invested in some stocks, and they 2-3 years later, they made money, which provides seed capital for their own company. Today, they are self-employed. Wow. You know, they have a services company providing different kinds of services. That's one. There's another group which was created using one coin, 100 coin together. From that also came from the University Challenge. So that group of students, I think it was a University of Kigali, ULK. So they created an investment club. That was a few years back. Today, they are licensed by a central bank to be a microfinance institution. They are employing themselves too. So they are lending to their fellow students, and they are providing services to other people. So their goal is to become a bank one day and offer other services. So those are the sorts of things we want to instill in them, to make sure that even the smallest amounts of money you have pulled together in a collective investment pool, you can make a difference for you in the
Very
future.
Encouraging. And now Mary says, how successful is our stock market?
Well, good question. How successful? Well, you will be the one to tell. I don't want to say how successful it is, but I can give you a few metrics, plans we've done, and where we are with the plans we did when we were establishing the stock market in Rwanda. So the establishment of the capital market was 2008. It's now soon going to be 10 years. Of course, there are different steps of creating a market. You create a regulator, put structures in place, and then the stock exchange emerged later in 2011. So that's when we started with a plan of listing companies and helping the economy to raise money. So you look at that from a point of view of why the thing was created. So the stock market is normally created to raise funds for the economy, for the public sector and private sector. So, and also to foster savings culture into people. The third one is to improve governance within the institutions which join the wagon. So, and professionalism and services are offered through that. So if you ask me how successful it was, well, I would wish that we do better, but I think we've been making progress as we went. So slowly we are gaining more companies. We have 8 companies listed today. Those are products that come to the market through their equities. We have more than 15 bonds listed, government and the private bonds. We have 2 corporate bonds which are listed on the market, which have raised the money through that market. And we have a bunch of professionals in different professional services in the country. So when you talk about raising money, which is what the stock exchange does, it's providing the long-term finance for those companies, entrepreneurs who want to do that. But at the same time, it's also improving their governance and accountability level. So those things are all improving the business to do the environment to do business in the country. And the third thing is on that, which is equally important, it's creating wealth for the people who are investing in it. You yourself, if you want to create a bank, you need 5 billion Rwanda francs in Rwanda so that central bank can give you a license. However, in the stock market, you are giving an opportunity to buy shares in a bank like Bank of Kigali or Equity Bank, which is a larger group. So these entities are profitable. So savers are gaining more places to save their money through, in a place which is accountable, which is well governed, which is something very important for people who want to save. But at the same time, it's providing a platform for the private sector institutions and government. At the same time, sometimes they come to raise funds. So that on that side alone, it has increased. And when you talk about raising money, long-term finance and cheaper finance for you, so you are improving your business. And talking of which, you are part of what you do with your money, you create more employment. So those are some of the benefits and some of the things that we are seeing progressing with the capital market, and of course without forgetting the electronic integration.
Maybe before we go to a break, Bruce here is saying, please ask Célestin if capital market is more of a gambling. Is it a lose or win? Do you put your money and just risk and say, I might not get returns? And how soon do you get these returns really?
Well, one has to understand one thing. When you are investing in the stock market, unfortunately, for most retail investors and ordinary people, they think stock market is a get-rich-quick scheme.
Yes.
Okay? By the way, I have bad news for you. It's not. So if you think like that, you are becoming a speculator. So there is no one I know who became rich overnight without winning a lottery. So you have to do a lot of research, you have to invest a lot, you have a lot of resources to become like that. If you go to Bill Gates or Warren Buffett or these big people, Facebook, Zuckerberg, all these people, they have put a lot of efforts in what they have done. But yet they use the stock market to get even better returns. So because the stock market, what it provides for investors, is a place to save in businesses which are productive and they are profitable. But it's a slow process. Okay. So if you go into it, you go into speculative move, you may lose your shot. Because the stock market, you have to remember at the end of the day, you are investing in the underlying business. It's not just pieces of papers. If you are buying shares of a company like Bralirwa, you are buying that company into what they do. So if what they do does not grow 20 times a year, so they grow. So
basically, if the company falls,
you will fall with it. So, but you know, most often people see things going red and green, say the markets has done well or the share price goes down, you think you lost money. That's not the case. Losing money means you are selling lower than where you bought at. That's what it means. If the company goes down, you don't sell, you are not losing money. If the company goes up and you don't sell, you are not losing money. But at the end of the day, what people must know, if you have shares of a company, you must look at what the company is generating in terms of revenue and net income, which you distribute as dividends. If you buy government bonds or some other bonds, it's you are lending money to that institution, and what they give you as interest during the period you agreed is what you are making money with. At the end of the day, when you bought a bond, they give you your principal, or unless you decide to sell it. So if you decide to sell and the shares are lower than you bought at, you are losing. If you decide to sell and the shares are up, so you are making money. So now, to sum it up, the stock market is not a place for speculation. Speculation is left to the traders. Traders understand that game, okay? And then also speculation can also be allowed to institutional investors who, first of all, have the muscle to do proper research and know when to go in and when to go out. And people who can afford that risk of losing 100 million, and you are okay. You can have another 100 million to invest. You see, and so there are all kinds of things people have to look at when they are thinking about the investment options.
Well, we do take a short break, and as just you have heard, it's not just all about losing, it's about win and no speculations in the capital markets. Now do keep it the BQ. We will be back after this short break. Welcome back to the BQ, and where we were before, we were speaking to the CEO of the Rwanda Stock Exchange, who was giving us some of the nitty-gritties to savings and, of course, some of the risks that are there in the market. Now, before we went for a break, as we continue now, someone asked that the regional capital markets regulators under the umbrella of the East African Securities Regulatory Authorities have agreed to support the establishment of the Capital Markets Advisory Center to enhance small and medium enterprises to access capital. How is this going to work?
Well, you know, within the regional integration framework, we've been having, you know, issues across the board. Actually, it's not even about East Africa alone. If you go on the whole continent, all the stock markets have been trying to create, you know, alternative market segments, as opposed to the big market segments where you have big blue chip companies, which are good big companies that comply with the capital market requirements for listings and raising that money. But the smaller and medium enterprises, they seem to have been left out. You know, it's not even being left out because most of our markets, including East Africa, mainly East Africa, let's go back to East Africa alone, we all have the alternative investment market segments. For Nairobi, they call it James Market. That's the growth enterprise market. Dar es Salaam has a similar one. Kampala has a similar one. Here in Rwanda, we have one since 2014, but we are yet to receive the first company. So there are different challenges on that. People are still reluctant to bring their companies to the market for fear of disclosures or not understanding well or not getting enough information. And the market, you know, the money is there, actually. All the stock market requires you to do if you are an investor or you are an entrepreneur is three things. You need to have good governance, accountability, and profitability. Those are very straightforward things. And we know very well, SMEs, they employ more than 80% of the workforce we have in our region. Rwanda being no exception. Actually, it's even more for Rwanda. So now, and most of our businesses are all SMEs. However, those three things we are talking about, they do not really comply with them that much. So, and the culture of associating with each other is not really that there yet. So we are trying to, that advisory center is trying to alleviate some of those fears and handhold these SMEs to make sure that they can be able to demystify, the capital market industry and how it can help them raise long-term finance.
You've mentioned something very important about protectionism, that it's not very easy to associate, and this is a fear that Liz says, and she's actually asking, so what are the benefits of investing in the capital market? What is what do they gain?
Well, okay, in the capital markets there are always two sides to the coin. There is the supply side and the demand side. The supply side mainly is the products, it's the companies, entrepreneurs, who are looking for investors so that they can match them with their shares or they can lend money to them.
Yeah.
So now, the Liz, what she's asking for is, she's asking as an investor,
yes,
as a retail investor most likely. So as a retail investor, if you want to invest in the stock market, basically, the first benefit is savings. Even if you invest in a share of a company, and the company does not go up, it remains there. You have saved that million francs you have invested in it. It's there, okay? You have the same money, but as opposed to keeping that money in the bank, if after 1 year or two, that money is no longer there. You may have even borrowed more. So that's one thing. So saving is number one.
Yeah.
Number two is the income, interest income or dividend income you get from the companies which you bought shares in, because when the companies make money, at the end of the year, they give dividends. If you buy bonds of a company or a government, they give you interest income every 6 months, most of them, or once a year. So interest income, then your capital, you get your principal, you get it at the end of the period. You have agreed. So that's number two, interest income or dividend income. Then there's what we call capital gain. Capital gain is where you buy shares or bonds at a certain price. You buy at, say, at 100 francs. You invest 1 million, and by the time you go to liquidate your position, you have it's higher. Instead of having 1 million you invested, it has become maybe 1.5 million. That 500 francs, 500,000 you've gotten, it's called capital gain. So that one is also another benefit of investing in the market. Another one is collateral. All your investments, actually, as long as they are public investments, they are on a listed exchange somewhere. You are holding bonds, you are holding shares, you can pledge them into any bank. Your bank can lend you money against that collateral. Of course, it doesn't mean if you are a shareholder in Bank of Kigali, they are definitely going to give you a loan. No, they must assess your capability of paying back. Yeah. Remember, the shares or bonds you are owning, they are only providing a collateral for you. So still the bank will assess your capacity, your cash flow to be able to pay back those the loans they have given to you. So of course you can also transfer ownership to your kin. So you can also give them as a gift to your children, or you leave them to your spouse or any other beneficiary in case maybe you die or go to retirement, and so on and so forth. So benefits are many. There are many. Yeah.
Now, as we sum up, maybe just two things that whoever is watching right now and feels maybe they've gotten something out of this and really want to invest. Where do they go to? What should they do?
If you want to invest in the stock market, you should go to your stockbroker. That's point number one. You need to open what we call an investment account, central depository account actually. But you go to your nearest broker. We have 9 members on the stock exchange, or you come to the stock exchange at Rwanda Stock Exchange. We operate from Kigali City Tower, the first floor, or you can call us, or you can approach any bank actually. Nowadays they can provide some advisory service, or they can guide you in what you can do. So visit our website is www.rw.rse. Okay. So that you can get enough information from that. And yeah, so the remaining part, it's just you get, whenever you open an investment account, you have opened it with an investment professional. So they guide you the same way your doctor would guide you or lawyer. So it's a service provider which will be guiding you through investment and giving you advice. Don't think for yourself. Leave it to professionals.
Okay. Thank you very much for making time to be with us.
Thank you very much.
Well, you asked, we brought Célestin to the table, and he's given us most of the answers that we needed. Now, do remember that this is the Big Q, and do talk to us via our social media platforms. And do remember to also to tell us who you want next on our show. This is the Big Q. Do keep it RTV.